Hey, Bowtie Nation, Joseph Hogue here with your weekly stock market update, 9 a.m. Eastern, every Monday morning with the stocks to watch and the stock market news you need to see. And Nation, this week with what could be one of the most important updates ever, as clues start piling up to a $15 trillion stimulus for the 2026 stock market. Now, you know I don't get political here on the channel, but when I see clues like this, you need to be ready. I'm going to reveal those clues to Trump's plan to supercharge the stock market, along with the stocks I'm buying. Stay tuned, and I'll also update you on news of a major trigger for shares of Strategy, MSTR, and Bitmine Immersion, ticker BMNR, why I'm considering taking our 322% profits in Bloom Energy, and an update to our stock market outlook. But first, back to that 2026 stock market, because clues are piling up to a massive government stimulus this year, and much of it is going to go directly into the stock market. Again, I am not getting political here, just reading the signs to make you money. And we've seen this picture before, right? Trump tweeted that it was a great time to buy stocks on April 9th, just as the market was crashing into his tariff threats, knowing he was about to ease off on those actions. The president again signaled the all clear on May 8th before signing the first of the coming trade deals. Those tweets were the start of what would become a massive rally in stocks, with the S&P 500 up 36%, and the tech-heavy Nasdaq up 50% into the rest of the year. Now, don't think I'm letting Trump off the hook or giving him all the credit here. His tariff threats almost crashed the market, so he doesn't get to own the upside. But the important point here is, nation, here's a person that has the power to push stocks in a certain direction, to push trillions of dollars into the economy, and who measures his success at least partly on the rising stock prices. Like him or loathe him, when he gives you these clues to where stocks are going, you need to be paying attention. Because now he's saying it again. Trump promised on December 18th that Americans would see the largest tax refund of all time. Treasury Secretary Bessent backed him up with a gigantic tax refund of $1,000 to $2,000. And while the trained monkeys here on YouTube are jumping all over the idea of new $2,000 stimulus checks and pointing to the massive 100% plus surge in stocks during the pandemic, what most don't realize here is the government isn't going to be mailing out any checks. It's already enacted the stimulus. That's because the changes in the One Big Beautiful Bill budget, the changes to those taxes and the rates, were retroactive to last year. The increased deductions, the higher child tax credit, the new seniors deduction, all those changes are going to factor into your 2025 taxes come this April. That is why Besant is calling this a refund rather than a new check, because companies were withholding part of your pay last year based on those old tax rules. Now, those OBBB changes mean they were withholding way too much. The average refund last year was just over $3,000, with this year expected to see that number jump by thousands. If that were it, it might support stocks where they are after 3 years of a bull run, but wouldn't be enough to send them much higher. But that's not all. Trump is also throwing out all kinds of clues to how he's going to boost the 2026 stock market, all ahead of the November midterm elections. And the amazing part is, this isn't some secret plan or conspiracy. They are saying it all out loud, and if you know what to listen for, you are going to make money. So I want to show you those other clues. What is going to turn this 2026 stock market into one of the biggest opportunities of our lives? Then I'm going to highlight the 5 biggest stock themes and the stocks I'm buying. And the first big catalyst here is the end of Jay Powell's term as Fed chair in May, which is going to allow Trump to pick a chair that is much more open to lower interest rates. Now, understand, lower interest rates help boost the economy through borrowing and the stock market through higher valuations, but there is more here than that. The Fed has already lowered rates 5 times, and that hasn't brought down long-term rates like those for mortgages, still stuck around 6%. But now the bazooka is coming. I've been saying for weeks that Trump is going to pressure the Fed or other agencies to start buying mortgage bonds, a big part of its 2008 and post-pandemic response that saw the Fed buying trillions of dollars in mortgages, forcing those interest rates to zero, and then pushing money into the economy. And Trump confirmed all this last week, saying his representatives have been instructed to buy over $200 billion in mortgage bonds. And while it's unclear how or when this is going to happen, it is going to happen and is just the start. And this time around, that mortgage buying and the lower interest rates is going to unlock tens of trillions of dollars in stimulus. Homeowners are sitting on over $35 trillion in home equity, a $15 trillion boost to the value of their homes in just the last 5 years. But because those interest rates have been so high, nobody is able to use it. The value of home equity loans, equity people have taken out of their homes, has shrunk to just 277 billion, while that locked up equity has surged to that 15 trillion. The problem is homeowners locked in those super low rates post-pandemic, and with more than half of all mortgages now at a rate of 4% or lower, that means nobody is selling their home or taking out any of that equity if they're going to have to pay 6% or more on interest. But a survey by John Burns Research found this changes around 5.5%, that magic number on mortgages that flips the market. That is only just over half a percent lower on interest rates, and very possible with that bond buying program the president is pushing. It unlocks trillions of dollars in home equity, jumpstarts the $55 trillion housing market, and becomes a massive stimulus to the stock market. In fact, that idea of getting interest rates down, that was also the real reason behind passing the Genius Act last year, the framework for stablecoins that kicked off the era of tokenization. You see, in that law, stablecoin issuers are forced to put their money back in those coins into very low-risk assets like US Treasury bonds. Issuers like Tether here hold the vast majority, more than 60% of their reserves, in US government debt. So this means as trillions of dollars in new stablecoins are minted, that money pours into those treasury bonds, further helping to lower those interest rates. Clue number 2 here into why Trump isn't done lifting stocks. Why do you think the government has invested over $9.8 billion in stocks? The US government has bought a $9 billion stake in shares of Intel, worth 10% of that company, has invested another $100 million plus in MP Materials, and has fronted a loan to Vulcan Materials, ticker VMC, along with its golden share voting rights over US Steel. Nation, this is the ultimate insider trading case. An insider with the power to push trillions of dollars into the market and specific companies, and that insider is buying up ahead of this boom. Trump has also signed another billion-dollar stock stimulus package with the Trump Account for Kids. Now, this is another one that is retroactive to last year, so is going to start affecting the market right now. Every new account here receives a $1,000 government bonus on top of up to $5,000 invested by parents. And here's the kicker. It has to be invested into the S&P 500 index of the largest US companies or a similar index. Direct government stimulus into stocks. Nation, it all comes down to the fact that a lot is riding on these midterm elections. Control of Congress, political control, and the purse strings to the government, and this administration is leaving nothing up to chance. Trump wants the stock market and the economy to be doing so well by November that everyone has enough FU money that they don't care about anything else. Now, putting all this together into the stocks to buy for 2026 is going to mean following a lot of what worked last year, staying in those growth themes that have taken the market up over 100% since 2022, and more than 50% just since the April sell-off. For each theme here, I want to point out an exchange-traded fund, not because I think it's the best way to play the upside, but because it's how you're going to find the best stocks in each group. We can look into the holdings for any ETF, find the leading companies in that theme, and then use that to start our research to find the best. And you out there in the nation know cybersecurity has long been one of my must-buy long-term growth themes, and we can look to the First Trust Cybersecurity ETF, ticker CIBR for stocks. The fund holds shares of 32 companies, though many of these are not pure-play cyberspace names. Within the group here, I'm buying Palo Alto Networks, ticker PANW, CrowdStrike Holdings, CRWD, Okta Inc., ticker OKTA, Fortinet, FTNT, and Zscaler, ZS, on their leadership in this theme. AI stocks have stumbled since November, but are still the growth theme everyone is watching, and we can mine the Global X AI and Technology ETF, ticker AIQ for stocks. It's a bigger fund with 86 names, but all these usual suspects here in the AI race. Here I would focus on the AI supply chain that we've been pulling from over the past year, showing the companies leading in those critical pieces of that flow. These are companies like Broadcom, ticker AVGO, and Marvell, ticker MRVL in accelerators, Micron, ticker MU in memory, NVIDIA, NVDA, and AMD in GPUs, and then Supermicrocomputer, ticker SMCI in servers. Here I also like Alibaba, ticker BABA for exposure to the China AI race, and Amazon, ticker AMZN, on its multiple levers for growth across e-commerce, cloud, and advertising. I'd also watch the VanEck Rare Earth ETF, ticker REMX. That's a fund of 32 companies in that rare earth and strategic metals theme, and this may be one fund that I'd recommend buying here rather than the individual stocks. That's because a lot of these are going to be stocks you might not have access to otherwise, stocks only traded on the Chinese or the Australian markets. Within the US stocks, though, I would watch Albemarle, ticker ALB, and MP Materials, ticker MP, for that government support and ownership. Looking at the stocks I'm watching this week, Bloom Energy, ticker BE, was up 40% last week on that growing need for energy solutions in AI. This stock is up 322% from recommending it last year in our best AI stocks outlook. Revenue is still expected to grow by 30% this year and next to $2.4 billion, and this is one of the few AI power stocks that is already profitable at 55 cents a share in earnings. That said, though, it is no longer the slam dunk on its valuation, with investors now paying over 15 times on that price to sales basis. Nation power generation is still one of the biggest supply shortage bottlenecks for AI, and Bloom is the best stock in that group, so you can continue to hold on for that upside. But investors that aren't able to take the risk or maybe just want to de risk their portfolio a little should consider taking some of those profits. Bank stocks are going to kick off earnings season this week, with Citigroup reporting Wednesday. Shares are up 163% since I named it my top value pick for 2024, but are also getting too expensive. At that time, the stock was trading for just 0.5 times on a price to book valuation, less than half the valuation it's at right now. With the stock's history of trading below 1 times book value, I'm not comfortable with it at 1.1 times book here, so I'm taking my profits and selling the stock. Fourth quarter earnings for banks and other financial companies are only expected around 6.4% higher from last year and may not be strong enough to support the sector's run, with the financial sector spider, the ticker XLF, up 15% over the last year. I'm also watching Strategy, ticker MSTR, which may have gotten an inflection point when the MSCI, the creator of benchmark indexes, decided not to exclude the digital asset treasury companies from its indexes. That had been a major fear for MSTR since November, and part of the impetus pushing cryptocurrencies lower. That's because trillions of dollars in index funds and other ETFs track those MSCI indexes, buying the stocks in those groups, so excluding MSTR would have meant being dropped from those ETFs. The decision helped shares of MSTR rise 3.9% last week, even as Bitcoin was up only 2%, showing that some of that leverage in MSTR is coming back. That is a big part of the MSTR story here. The MNAV, or the value of the shares above the value of the Bitcoin it holds. Through 2024 and last year, that multiple was over 2 times, meaning investors were paying twice as much for the shares as the value of the Bitcoin assets the company held. It allowed MSTR to use something like an infinite money loop, selling shares to buy Bitcoin, which not only boosted the cryptocurrency, but also the stock price. But then, as that multiple started to evaporate in November, partly under the MSCI fears, the stock value plunged. Now, though, if we are seeing that MNAV increase once again, it's going to go a long way to help rally shares of Strategy and cryptocurrencies. Bitmine Immersion Technologies, ticker BMNR, holds its annual meeting on the 15th, and a very important vote allowing the company to increase its authorized share count from 500 million to 50 billion. There are no clues here to how the vote's going to go, but it could be a massive trigger for Ethereum, which I pointed out in a post on Blossom over the last week. That's because if you think about it, there are only 120 million Ether supply at around $3,100 each, so a total market value of $372 billion. That share increase authorization would allow Bitmine to issue basically unlimited shares, right now around $31 each, to buy more Ethereum. That means, with just 11.5 billion in new shares issued, the company could corner the market in Ethereum and set whatever price it wants. Now, of course, that's all hypothetical, and Bitmine wouldn't be able to buy up all the Ethereum, but it would become something like the Fed's central bank for crypto, able to buy up supply and support the price when needed. It would mean dilution for BMNR investors, but ultimately a much higher stock price as it pushes Ethereum higher. You out there in the nation know I'm invested heavily in Ethereum as the rails on which tokenization is being built, and I'm buying the iShares Ethereum Trust, ticker ETHA, for exposure, but this also cements Bitmine as a key player in crypto. I'll be updating my portfolio soon on the Blossom app, so if you haven't signed up yet, use the special invite link I'll leave in the description. I've been using the app for 2 years now and love it for getting ideas and sharing my portfolio. Besides seeing the stocks I'm buying, you're also going to join over 500,000 investors in the social feed. It is totally free to download and helps support this channel, so look for that link below and check it out. Showing you the bigger picture here with the Sector Spider sector tracker. 10 of the 11 stock sectors closed higher last week in a continuation of the rotation we've seen started in November. Tech and communication services stocks continue to underperform, along with utilities, which have been bid up in that AI energy boom. Consumer discretionary stocks rallied ahead of these Q4 earnings, where investors are hoping to show a stronger holiday retail season than feared. That rotation from AI and growth themes into these other sectors is a sign of a healthy market, but I'm not sure it lasts much longer. Healthcare stands out as the biggest winner here and is echoed in Friday's jobs report, where we saw that what few jobs have been created last year were all concentrated in the healthcare and social services segments. I do continue to like healthcare and real estate as defensive stocks, but bull markets are led by growth, and if you believe this bull market continues, then those days of outperformance by the other sectors here, like materials, industrials, and financials, are probably numbered. My experience says that Q4 earnings will show growth stocks in tech and communication services is still where the returns are at, and money is going to be flowing back into that. Updating our stock market outlook, it is a heavy week for economic data, though nothing is expected to really change the market's direction. We're going to get the Consumer Price Index, the CPI measure of inflation, first on Tuesday, with forecasts for 2.7% pace of price increases, which would match the previous month's report. Then the Producer Price Index, the PPI report, is expected to echo this still high but not too bad view of inflation. The weak jobs report we saw Friday wasn't weak enough to improve chances of a Fed rate cut when the central bank meets here on the 28th, and this week's inflation reports probably won't change that either. Market expectations now sit at 95% odds. The Fed keeps rates on hold, with the next cut not expected until June, and then one more in September. President Trump has hinted that he plans on naming Fed Chair Powell's successor before the World Economic Forum in Davos on the 21st. Now, most are expecting Kevin Hassett to get the job, but whoever it is, they're going to repeat Trump's calls for much lower interest rates. Now, it might not be a surprise when the pick is made, but the market could still rise on less uncertainty as it puts bets on more rate cuts. It's earnings that are going to guide stocks over the next month, though, and those should be good enough to support the market highs. Analysts expect stocks in the S&P 500, again, those 500 largest companies in the US, to report profits grew 8.3% from last year. Now, since companies almost always beat expectations, this earnings growth is likely to be closer to 10% by the time all the reports are out. Tech is once again the runaway leader here, with profits expected up almost 26% from last year. Even better, expectations for those profits have increased over the last few weeks, with analysts raising their forecast by 6% for tech firms. Financials and energy companies also saw earnings expectations increase, but it's really tech that is important here. With tech stocks now accounting for 34% of the S&P 500 index, a positive quarter for the sector is likely to drive investor sentiment and help the entire market move higher. Join me on the Blossom Investing app and see the stocks I'm buying, all free with the special invite link in the description. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.